You know, for years, the world of venture capital has kind of felt like a game of giants, right? These massive firms with enormous war chests. But listen, that game is changing. There's a quiet revolution happening, and it's shifting the power away from those old school mega funds in towards something new, something much more focused. The death of the mega fund. I mean, let that sink in for a second. This isn't just a catchy headline, it's a reality, and it's backed by some pretty hard numbers. Those billion-dollar funds that used to dominate every conversation, they're starting to fade, and the data shows us exactly what's taking their place. $79 million. That was the median size of new VC funds, launched back in August. Now, you might be thinking, hey, that doesn't sound like a billion? And you're absolutely right, that's the whole point. The new guard of VC isn't defined by sheer size, but by its focus. They're leaner, they're way more specialized, and they represent the first huge trend that's reshaping this whole industry. Okay, so this brings us to trend number 1, specialization wins. See, this move towards smaller funds, it completely changes the strategy. You can't just spray and pray anymore, betting on dozens of companies hoping one hits. Nope. Today, the winning strategy is all about specialization, where having deep domain expertise isn't just a nice to have, it's everything. So where is this specialized money actually flowing? Well, take a look. A full 21% of these new funds are laser-focused on AI and machine learning. Then you've got another 16% diving deep into healthcare and 12% in climate tech. These aren't generalists, folks. These are managers with PhD-level knowledge who win the trust of investors because they know these complex fields inside and out. The big takeaway here is so clear. Expertise has become the ultimate currency in this new world. If you're a fund manager and you can't speak the same technical language as your founders, you're simply not going to be able to compete. You're already losing. All right, on to our second trend. This focus on deep expertise is having a really fascinating side effect. It's totally breaking down the old geographic barriers. For decades, venture capital really only had one address, right? Silicon Valley. Well, that monopoly is crumbling, and it's happening fast. So yeah, the US still accounts for the majority of new funds at 56%, but look at this. A massive 44% are now popping up internationally. That is not a niche market. That's almost half of all new institutional-grade capital. It proves that the venture landscape is now truly global. And we're not just talking about the traditional hubs like London or Shanghai. We are seeing serious institutional-grade funds emerge in places like Croatia, Poland, and Denmark. It's just a powerful reminder that world-changing innovation can and does happen everywhere. The next unicorn could absolutely come from Zagreb. So if the funds are more specialized and more global, it kind of begs the question, who is running them? And this brings us to our third major trend, and it reveals this whole new archetype for the modern venture capitalist, one that looks very different from the old guard. I mean, the contrast is just stark. The old model was completely dominated by people from a finance background. Success was measured by AUM, assets under management. Basically, how big was the fund? The new model values technical expertise and powerful operator networks. It's all about people who have actually been in the trenches, building companies themselves. And where are these new managers coming from? Just look at this list. OpenAI, Palantir, SpaceX, Coinbase. These are the most iconic, most technically demanding companies of our time. So these new VCs, they don't just bring a check to the table, they bring an invaluable playbook on how to build, how to scale, and how to win in today's market. Okay, so let's tie this all together. We have these 3 powerful shifts, right? Hyperspecialization, globalization, and the rise of the operator investor. But what does this all mean for you? Because whether you're a founder, an investor, or a fund manager, these changes have some pretty direct consequences. The takeaways here are super direct. For founders, stop chasing the biggest brand names. Go find the fund that truly gets your niche. For LPs, that's the limited partners who invest in these funds, the data suggests the best returns are coming from these smaller, specialized first-time funds. And for all you fund managers out there, the message is simple. Your operator network is your new AUM. Ultimately, it all just boils down to this one single powerful question. The entire venture capital ecosystem is reorienting itself. It's no longer about how much can you deploy. It's not about who can write the biggest check anymore. Now, it's all about how much value can you actually add. A question for everyone in the industry to really think about.